Don't be dumb with your money. Smart money moves start with smart money questions. So here's 5 great questions you can ask when you're looking to invest in your next multifamily deal. My name's Chris Collins. I invest in multifamily properties like this all around the country. So I've asked a lot of questions. Here are 5 that I think you should start with when you're considering any deal. Number 1, what are the current rents when you're buying the property? And then what are the projected rents in year 1 through 5? You want to see conservative numbers, but that doesn't mean you want to see low numbers. Basically, what you want to do is look at what the other properties in the market are renting for and see if you're projecting to get there or are you projecting to get above there. Aggressive numbers are hypothetical. Aggressive numbers can let you down as an investor. So I'd rather see conservative numbers and see if that still makes sense as an investment. Number 2, what is the purchase price per door and what's the exit price per door? Really what this is taking your purchase price and dividing it by the number of units at the property. You don't want to be overpaying for a property. Of course, what we all want is a rock bottom steal of a price where other properties are selling for $150,000 per door and you're buying it at $80,000 per door. But what's important is that there's a business plan and that when they factor in that price per door, it still makes sense and can earn a good return for you as an investor. Ideally, of course, we're buying it at a purchase price that's down here and we're able to sell it for a sales price, an exit price that's up here. That's just basic real estate investing. Now, this might take a little bit of research to figure out if the purchase price per door is low or high. So some things you could do is 1, you could get to know some brokers in the area by simply reaching out and calling them and asking their opinion. 2, you can ask the deal sponsor, the person who's operating the deal, and ask them for recent sales comps. Or 3, you could simply watch deals come through over time as you pay attention to that market. That way you'll know yourself what other apartments have been trading at or have been selling for. You get to know your market over time. Number 3, what are the projected returns for you as an investor and how are they structured? You need to understand the division of ownership, also called equity splits. How much for the investors and how much belongs to the operators. Remember, the operator will earn some equity in the property for doing all the work. It's called sweat equity, but the rest of the equity belongs to the investors for putting up all the capital to buy the property up front. Typical splits might be an 80-20 split, 80% belonging to the investors and 20% belonging to the operators. But every deal is unique and specific, and there's reasons for that. You also want to know if there's a preferred return to the investors. This basically gives investors the first shares of the profit up to a certain percent return, and then the remaining profits get split according to the equity ownership. There are pros and cons to preferred returns, so make sure you ask a lot of questions and get to know why it works or doesn't work for this specific deal. Number 4, what is the operator's experience in the market? Hopefully they have a track record, they've invested there before, and hopefully there's some boots on the ground that can oversee the property on a regular basis. And number 5, what is the exit plan? This is really important. You need to know who's going to be buying this property in the future. What's the ideal buyer look like? Are you looking to sell the property in 3, 5, 7 years, or are you hoping to refinance and hold it long term? This needs to align with your goals as an investor because not every deal works for everybody. So of course, there are way more than just 5 questions that you should be asking as an investor, but this list should get you on your way, should get you started. And one bonus tip is if you're not sure what questions to ask, go ahead and attend the investment webinar and listen to other savvy investors. Listen to the questions that they ask, and then you can ask those questions in future deals. You'll get to know what kind of questions and answers are important to you as an investor. My name's Chris Collins with Amity Cashflow. We'll talk to you more tomorrow about investing in apartments.